NIO stock ended Friday's aftermarket at around $6.48, extending its recent slide after Donald Trump's latest comments reignited trade war fears. But in a surprising shift, Trump later posted on Truth Social that the United States wants to work with China and avoid a depression. That message, though not official policy, marks a subtle but important softening in tone. And for a market battered by anxiety over tariffs and decoupling, tone matters. So the question for this weekend is simple. Has NIO bottomed out, or are we just entering a new wave of volatility? Let's start with the macro backdrop. The biggest story continues to be the tension between the US and China. Over the past week, Washington has floated the idea of new tariffs, while Beijing continues to tighten export rules on rare earth materials, a vital ingredient for electric vehicles and semiconductors. These policy threats have amplified fear across markets, pulling Chinese equities and EV stocks lower. Even strong names have struggled. The broader theme is uncertainty. Investors are asking, will this escalate into a full-blown trade conflict, or can cooler heads prevail? Trump's post about working with China to avoid a depression may not change policy overnight, but it's the first positive rhetorical signal we've seen in a while, and markets will be watching to see if any follow-through comes next week. Now, while macro noise has dominated, NIO's fundamentals remain surprisingly solid. The company delivered 87,071 vehicles in the third quarter. That's a 41% year-over-year increase, achieved in a challenging environment. It's a reminder that demand for NIO's vehicles hasn't collapsed. The brand continues to attract customers who value its design, technology, and battery swap convenience. Those infrastructure investments, the charging and swapping network, have become one of NIO's defining advantages. The company now operates thousands of stations across China and continues to expand internationally. In short, the long-term story still looks intact, even as the stock price tells a more emotional, short-term story. At the same time, NIO's growth is not without strain. The new ES8 SUV has generated strong demand, but the high order volume has led to long wait times, stretching into early 2026 for some customers. That kind of backlog can be read two ways. Bulls see it as evidence of healthy demand. Bears see it as a sign of supply constraints and execution risk. To its credit, NIO has pledged to compensate buyers impacted by the delay, showing it's willing to absorb short-term pain to maintain trust and brand reputation. The company has also raised new capital, roughly $450 million through a share placement, to fund research, production, and expansion of its charging network. Yes, dilution is never popular with investors, but NIO's business is capital-intensive, and this move adds breathing room in uncertain times. It's part of a pragmatic survival strategy: shore up the balance sheet, keep investing, and outlast competitors. Meanwhile, NIO's short interest has dropped below 10%, suggesting that many of the most aggressive bearish bets have already been unwound. That's worth noting because when short interest declines, it can sometimes set the stage for a more balanced market, where price movements are driven more by fundamentals than by short-term speculation. So where does that leave the stock technically? Right now, NIO is hovering in a familiar zone, between $6.40 and $6.60. This region has acted as support before, and once again, we're testing it. If buyers step in here, it could form a base for a potential rebound towards $7 and beyond. But if that support breaks convincingly, the next downside level sits around $5.80 to $6 even. That's the risk zone where sentiment could turn sharply negative again. So traders should keep an eye not only on price, but on volume. Rising volume on up days would signal that accumulation is happening again. Weak, low-volume bounces would be warning signs that the floor isn't quite ready. Let's explore a few possible paths for the week ahead. The first scenario is stabilization and bounce. In this setup, Trump's softer rhetoric continues, trade tensions ease slightly, and the fear premium embedded in Chinese equities begins to unwind. NIO holds above 6.5, attracts fresh buyers, and begins a climb back toward the 720 to 750 zone. This would reflect a shift from panic to pragmatism, where investors focus again on NIO's deliveries, its strong infrastructure lead, and its clear runway for expansion. The second scenario is what we could call a false bottom. Here, things look calm for a few sessions, but then escalation returns, tariffs are confirmed, or rare earth restrictions tighten further, and the stock breaks below 630 on heavy volume. That move could trigger stop losses and push the stock down toward 580 or lower. In that case, we'd likely see volatility spike again, and investors retreat to the sidelines. The third scenario is range-bound uncertainty. In this one, rhetoric remains mixed, policies unclear, and neither bulls nor bears gain control. NIO trades sideways between $6.30 and $7, frustrating both camps until a catalyst, maybe earnings or a government announcement, breaks the range. This kind of indecision is common after sharp drawdowns, as the market digests new information and resets expectations. My base case leans toward the stabilization and bounce scenario, though cautiously. Trump's work with China comment, small as it may seem, could help calm the waters temporarily. Combine that with improving delivery numbers and lighter short interest, and we have the ingredients for at least a technical rebound. But this call comes with a clear warning: any sudden escalation in trade rhetoric could reverse the trend instantly. In this environment, conviction must be paired with caution. Let's also consider the broader risks that remain in play. First, policy flip-flop risk. Trump's tone can change quickly, and current US policy direction is still uncertain. Second, the risk of China doubling down on rare earth restrictions, which could ripple through the global EV supply chain. Third, financing risk. While the latest capital raise helps, investors will still scrutinize NIO's cash burn and potential need for more funds down the road. Fourth, competition risk. Rivals like Li Auto, XPeng, and BYD continue to roll out competitive models and invest heavily in autonomous tech. And finally, the macro wildcard, a global equity pullback tied to rates, inflation data, or geopolitical shocks. Any of these could weigh on sentiment regardless of NIO's execution. Still, the bigger picture story around NIO remains compelling. It's one of the few EV players that has built a differentiated infrastructure ecosystem. The battery swap model, though capital heavy, provides a convenience advantage that customers appreciate. And in the long run, that kind of loyalty could translate into resilience. NIO's management continues to emphasize brand value, long-term innovation, and steady global expansion, rather than chasing short-term market noise. Volatility can be uncomfortable, but it's also opportunity. Long-term investors often find their best entry points when fear is high and narratives are clouded. Of course, timing a bottom is impossible, but identifying a zone of potential value, supported by improving fundamentals and reduced speculative pressure, is a sound strategy. The 640 to 650 range could be one of those zones if macro conditions cooperate. Looking to Monday and the start of next week, here's what matters most. First, whether Trump's work with China remark gains any policy traction. If US officials or markets interpret it as a step back from confrontation, that could lift sentiment broadly. Second, keep an eye on Chinese manufacturing and export data, as it provides a real-world check on how severe the slowdown is. Third, watch for trading volume. Real conviction will show up there first. And fourth, track other China-sensitive names like XPeng, Li Auto, and even semiconductor stocks. If they begin to stabilize, it will likely signal that the worst of the panic is behind us. So, has NIO bottomed out? Possibly, but confirmation will depend on whether rhetoric turns into restraint. Markets don't rally on tweets alone, but tone shifts can create the breathing room needed for fundamentals to reassert themselves. For now, the setup looks cautiously constructive, but fragile. The key is to stay nimble, avoid oversized bets, and focus on evidence rather than emotion. If you're a long-term believer in NIO's vision, this might be a time to observe closely and scale into strength rather than weakness. The company continues to execute operationally, grow its delivery base, and invest in infrastructure that few competitors can match. The path may stay volatile, but volatility often precedes clarity. And that's your weekend NIO update. We'll keep tracking the headlines, the macro shifts, and the market's next moves as we head into Monday's aftermarket. For now, stay focused, stay rational, and remember, even in the most uncertain times, markets eventually find equilibrium.